Hi, this is James Shug with Westpac London's end of day report for Wednesday, October the 3rd. Look, it was a bit of an update on European equity markets, but only just. The PMI surveys that we saw for the non-manufacturing sector out of China disappointed with further deceleration there. And although there was a slight upward revision to the European PMI for September for services, and indeed the composite PMI as well, at just over 46, it's still pointing to contraction in the European economy at the end of the third quarter. We get GDP figures out in the middle of November, and we're expecting those to show a steeper 0.5 or 0.6% pace of economic decline compared to the minus 0.2% we saw in the second quarter. You had retail sales figures out for Europe. They were fairly flat, just up 0.1%, and down 1.3% over the year. In the US, we had the ISM non-manufacturing survey, which actually came in stronger than expected. It rose from 53.7 to 55.1, so it was the strongest in 6 months, so bucking the trend that we were seeing in those other non-manufacturing surveys elsewhere. And also private payrolls, as recorded by ADP, rose 162,000 in September, down from a 189,000 gain in August, but still running well ahead of what the official private payrolls numbers have been showing of late. So some positive numbers out of the US. The UK PMI services came in at 52.2, down from 53.7, so it showed some deceleration after jumping in August, perhaps a bit of a bounce, a bit of a pullback from an Olympics boost there. That's about it on the data flow. So summed up, apart from the US where the data was positive, mostly softer news, particularly related to those surveys in Asia, Europe and the UK. So in terms of, Spain hasn't applied for a bailout yet. Apparently it's not imminent, according to the Spanish Prime Minister. So we've got the European Central Bank meeting tomorrow. Inevitably there'll be lots of questions asked about how effective ECB policy is if you can't actually buy the bonds because no one's applied for a bailout, which of course is a condition for the bond buying to take place. Okay, so in terms of markets today, the London market, the FTSE up 0.4%, the French market down 0.1%, the Germans up 0.4%, Spanish market down 0.4%, and the Italian market up 0.4% today. And the Dow's currently up 0.3% at 13,523. The commodity markets, oil down very sharply today, a 3.2% drop to $88.95 a barrel. Weekly inventory and supply data showed, I think it was more than 11,000 barrels a day increase or supply of oil in the latest week. I mean, much stronger, much faster than we've seen in some years. The copper price though down 0.6% and gold up 0.25% today at $1,780 an ounce. In terms of the Aussie dollar, it's at 1.022 against the US dollar. It fell on the trade figures that came out yesterday with the much wider deficit than expected. We've got retail sales figures and building approvals coming up today, Thursday, Australian time. So that will offer a bit more local direction perhaps to the currency. As I say, 1.0216 at the moment. Okay, that's it for today. I'll be back tomorrow.